Hi everyone, welcome to this time's Scrolling Finance. Well, last week was quite a big news week. CPC Politburo Meeting was held and notified a lot of information. China's bonds market fluctuated with the meeting and went up and down many times. Very unstable. So as always, let's have a review of the bonds market, then check out details part. Alright? Total bond yields curve was downward and steep compared to the week before. Yields of 3, 5, 10, and 30 years terms went down 3.3, 3.7, 2.7, and 2.4 basis points. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3 years term went up 6 basis points, while 5, 10, and 30 years terms went down to 21 and 17 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds was almost unchanged, with 5-year spread was 44 basis points. About the actions of investment agencies, in last week, for short and middle-term bonds, other financial agencies bought 77 billion yuan. City commercial banks sold 82 billion yuan. And for long and ultra-long-term bonds, funds and other financial agencies bought almost 59 billion yuan together, whereas big banks and policy banks and agricultural commercial banks sold 75 billion yuan together. Next, let's check out the details part and see what happened last week. In terms of fundamentals, the most important, let's see what did the CPC Politburo Meeting say about the economy. First is the economic situation. The meeting says that the country's economy is underpinned by a stable foundation, multiple advantages, strong resilience, and great potential. And the supporting conditions and the fundamental trends for long-term sound economic development have not changed. Second is the policy resume and the specific attitudes of which. The meeting mentions that macro policies should be continuously strengthened and intensified in a timely manner, and stressed implementing and refining a more proactive fiscal policy and a moderately loose monetary policy. It is good the policy showed confidence, patience, and a positive attitude to no matter fiscal part or monetary part. Third, the key areas that policies focus on. First is the demand area. There will be more stimulated and supportable policies to make demand more sufficient and efficient. The government will stimulate the vitality of private investment and foster new growth drivers of service consumption. Second is the real estate area. Urban renewal should be promoted with high quality. Fourth, about the capital market. The attractiveness and inclusiveness of domestic capital markets should be further enhanced. Fifth, about anti-convolution. China will further regulate disorderly competition among enterprises in accordance with laws and regulations, and advance the management of production capacity in key industries. So let's summarize it. The meeting affirmed that the economic situation of first half year was stable and made some progresses. The prospect is positive. The hardest time was getting through. More and more stimulated policies will be launched to improve the economy. Then let's see data part. The manufacturing PMI and the Caixin manufacturing PMI were released, which were 49.3 and 49.5, all under the prosperity line 50. So if we take all this together, we can get that the demand part is still weak, and the CPC Politburo Meeting didn't give more specific policies to solve it. Though the fundamentals of first half year was good, but according to the meeting again, China's development is still facing profound and complex changes, as strategic opportunities, risks, and challenges are concurrent, and uncertainties and unforeseen factors are rising. So from long and ultra-long terms view, the fundamentals will be by the bond side at the moment. But since the economic situation is getting better, we should care about the invasion that happens in third quarter. For funding conditions, last week, the funding condition was loose. The financing price for non-banking agencies was under 1.5%, and the PBOC kept neutral in liquidity, totally investing 7 billion yuan last week. The CPC Politburo Meeting delayed the statement about cutting policy interest rates, but kept words about a moderately loose monetary policy. So I think the attitude of the PBOC to the bonds market will be loose and stable, but we shouldn't count on cutting policy interest rates. Plus, the financing price is at the bottom of this period of time. So from short and middle terms view, I have to say that the profitable space is limited. We should be more cautious than before. What should we pay attention next? First is the stocks market. Whether the thaw is over, the economy probably turns good in third quarter. So I guess that the trend of the stocks market won't stop easily. Second, economic data of third quarter. It's crucial to use this to verify the recovery extent of our country. Third, of course, the funding condition. If this turns against the bonds market, well, we'd better sell out all of our positions. About bond investment strategies, well, this couple of times were unfriendly to the bonds market, and the sentiments in the market changed rapidly, so it is hard to guess where the direction goes. But I think the power to incent the bond yields going low is weak, so I'm reluctant to buy more bonds, either long one or short one. I plan to wait for a big adjustment to happen, then increase my DV01 with a better position. So, as always, if you want to know more useful finance information about the Chinese bonds market and economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience and waiting for you. So bye guys, until next time.